Hello and welcome to BloombergQuint. With me today is Deepak Parekh, Chairman of HDFC, and Milind Barve, MD and CEO of HDFC AMC. Gentlemen, thank you for joining us on BloombergQuint. To begin with, Mr. Parekh, the markets have gone through a roller coaster ride, and we are almost at the peak. Do you think that the way the IPO has been priced, there is enough room left for investors to take profits?
Well, our philosophy, this is the fifth company we are listing. And our philosophy has always been to leave money on the table. Leave enough money on the table so the investors are there not to finance you but to make a return. So we feel that we have left some money on the table for the investors and we've not fully priced it. We are always conservative in pricing issues. We don't have a single company in our group where investors have lost money so far. And we don't want that to happen with this issue. So we've discussed it with different people, we've discussed it with our bankers, and consensus has been that 1100 would be a reasonable price.
Mr. Barve, I was looking at the next listed peer, Reliance Nippon. It has a market cap of nearly 13,000 crores. 13,000 crores, and you will be coming at somewhere around 28,000 crores. That's almost double. Of course, the pedigree will get a kind of the valuation as well. But are you comfortable with the kind of valuation which it is been priced at?
It won't be very fair to sort of draw a comparison and speak vis-a-vis the valuation of another company which is a peer, and we all respect our competitors and peers. But the business is indeed quite different. For example, we are more than 65,000 crores higher in AUM. More importantly, our equity business is significantly larger. We are almost 56 to 60,000 crores ahead on the equity AUM. Our equity AUM is almost 50% or more. I think the Reliance number is probably a little less. They're a very good, strong fund house. I think the most important thing is that the asset management company makes revenues in two forms, which is the core operating profit of the asset management business, and then there is some other income. If you would just compare the operating profit from the core asset management business, our operating profit is almost 90% higher than what is been given by Reliance. So in some sense, it's a great company, but the numbers and the business and the financial parameters are distinctly different.
I'm bringing it because the street will compare. That's the reason I'm bringing it here. But your IPO is riding on the retail wave because the kind of retail participation we've seen in mutual funds in the last 2 to 3 financial years. Do you see enough expansion of the retail base going in? And if I put in some numbers there, you have 71 folios, roughly 29 million PAN card holders, maybe 17 million unique folios, and you will be having around 25% of that unique. Is there enough expansion available for HDFC Mutual Fund as far as bringing in more retail investors into the fold?
So for many years, we used to talk about the potential of the mutual fund industry. That potential is now just beginning to unfold. So for many years, we said, this industry number, we used to get 15,000 crores in a year, and we used to think that was a good year. We now are getting 15,000 crores a month. So I think the whole understanding and awareness of mutual fund has just gone to a different level. So the flows today, we are of the order of about 15,000 crores even in the last quarter. And the flows are continuing to remain very strong. So I think we had a huge flow in FY18, which was almost of 240,000 crores in equity AUMs, just in terms of new flows. In the current year, it's also started off pretty well. We are at about 40,000 crore in the first quarter. And I think the proof of the pudding is that these flows will not come unless people have a positive experience about investing in a mutual fund, have experienced or have been now more aware of what these mutual fund features are, and they find it suitable. So I think even the AMFI awareness campaign has created a reasonably good impact in bringing sort of the message of mutual funds to their houses and in their rooms through the television ads. So all of this has created a fairly strong background and a backdrop to the flows being reasonably well sustained.
Mr. Parekh, do you see these flows to be strong, considering we have a lot of headwinds coming in terms of macroeconomic factors?
No, that's the reason we've priced it conservatively. I know there are a number of IPOs. I know there are some headwinds against India, particularly not our doing. nothing to, out of our control, like oil price and strengthening of the dollar and all. It's nothing to do with us. But there are headwinds, and the market is all-time high. But we have priced it moderately. And as I mentioned, that equity investment is a long-term game. You have to be patient if you invest in equity. You cannot look at the price every day. In the press, okay, what is the price? Has it gone up or gone down?
That's a mantra for SIP investments, but for IPO investments?
I would say for any equity investment, it's a long-term investment. You don't look at share prices every day.
How do you see the economy shaping up, given the kind of constraints or headwinds coming in from currency, from crude, geopolitical risk which is coming in?
But the consumption, you see, India is a domestic consumption-driven economy, and the consumption engine is booming. Every consumption item is growing. If you see sales of auto-related, two-wheelers, tractors, ancillaries, if you see the chemicals, if you see financial services, these companies are growing rapidly. And because in middle class is growing, urbanization is happening, and urbanization also brings in more requirement of these goods and services. So I think we are on so far as consumer credit also is concerned, not just mutual fund. Consumer credit, we've not even scratched the surface compared to China. China is 3 times more our consumer penetration level. Consumer as a percentage.
What about asset classes like real estate? That's very much linked to your business. Are you seeing the same kind of buoyancy there?
Real estate, affordable real estate is doing well. We need faster approvals, but other than that, affordable real estate, there's a massive demand. Expensive flats in big cities are not selling. 5 crores and 10 crores and above flats are just not selling. And there's a surplus, there's a glut in that, because far too much construction. Supply has overstripped the demand. It'll take time for the existing supply, the stocks to get depleted. But affordable homes, small homes, there's a huge demand.
Milind, you spoke about the factor that every 1 bips increase in margins for you, you add 29 crores to your bottom line. What is the kind of headroom you have there, given that you have been able to bring down your operating expenses to a low level, and tomorrow if the market turns around and your AUMs people start withdrawing or redeeming, will that have an impact on your margins and expense ratios?
So firstly, this is a business in the long haul. So it is not something that we expect to be there on every month or every day and every week. But we have been able to establish that as AUMs have grown and as we keep maintaining a very strict vigil on the cost, we are able to at least maintain or improve the operating profit margin. And my sense is that what we will be our focus is going to be in managing cost and managing the top line in a manner that the operating profit margins are at least maintained. And we have been able to demonstrate in the past few years that we have been able to maintain the margin or in fact grow it. My sense is that as long as we maintain a product mix in which equity is a reasonably large portion and we have a reasonable share of equity in our total book, we should be able to maintain the operating profit margin, if possible improve it.
Mr. Parekh, 12% is the dilution which you're looking at this IPO. You will have to reach to 25% eventually. When do we expect that? Will you be looking at a follow-on offer, or you will be selling it to?
No, we have not yet decided, because we have to take Standard Life's views also. But our ultimate holding pattern, we are going to be holding, HDFC will hold 50.1. The public will hold 25, and Standard Life Asset Management will hold 24.9.
Okay. My final question here to you is that I was going through your annual report and your letter to the shareholders. You was talking about bringing in some kind of succession planning into it, because age is something which is catching up with all the senior management levels. When do we see that broad plan for the entire group coming in?
Each company has their own plans. Each company will have to sort out their own succession plans. And each company's board is aware of it, has taken cognizance of it, that in a year, 2-3 years, the senior management has to move on. So it has, I just mentioned it because we are concerned We are thinking about it.
But why will you be concerned? Because you have good 2 second-tier managers.
We have managers, but the process has to have gone through, and it's not automatic that the number 2 becomes number 1, because you have to go through the marketplace. You have to get the best talent possible. Sizes of our companies are high, market caps are high. We have to do a process that satisfies international
So far, you have brought in talent from in-house.
We have always taken talent from in-house. So we'll have to see. But first is my case. I have to step down sometime as non-executive chairman of the group.
You have put a timeline to that?
Well, next 2-3 years, I'll have to 2 years.
So, thank you very much for joining us today on BloombergQuint. Thank you, Mr. Barve, Mr. Parekh. Thank you.
Thank you.